Morning, everyone, and thanks for joining us this morning on Q&A with Whitey. Today, our hearts and thoughts go out to all of our industry family friends in Victoria, reporting 723 new cases and 17 deaths. It's a tough gig, and I know it makes it even harder when you're working down there. And I know what it's like firsthand. In April of this year, when we're in the peak of the wave of this COVID-19, my 94-year-old mother passed away in Sydney. And I was stuck up here in Brisbane. She was in a nursing home. It wasn't a COVID death, but it was complicated by that. Did the 10-person funeral, and I did the runner down to Sydney for that. Came back, spent 14 days in self-quarantine. So yeah, it's tough. I know it, I feel it, and we wish everyone down in Victoria all the best as they deal with this. Well, let's get on with this morning. So, usual gig. Got your coffee? Got mine. You noticed I haven't got the grumpy old man mug on today, so it's probably going to be a good start. And my darling wife, once again, has cooked up some blueberry loaf for me. So, I'm looking forward to enjoying that. I'm sure it's sugar-free. We know that one. So, anyhow, thanks for joining us. Let's get on with things. I better thank our sponsors before we get too far. We really appreciate all they do for us and the support they give us, even in these really tough times. So to ALI, Bluestone, Finstro, Prosper, Lens, Suncorp, On Deck, Pepper Money, AAMC, Strive Financial, Insurance Advisor Net, Credit Fix Solutions, and Trailbook Loans. Thank you so much for your support. And in line with that, last 2 weeks ago, we had a fantastic conversation with a group of ladies from our industry who are brokers out there, and some magnificent feedback from their conversations. And I'm expecting a lot from today's guests, who I think we're fortunate to probably have some of the most handsome men in our industry joining me this morning. And I'd like to welcome Sam White from Loan Market, Sam Boer from Smartline, and Sean Preece from Vow Financial YBR. Gentlemen, welcome. Thanks for joining us this morning. Click on, boys. Technology can be a bit tricky for some guys. Here we go.
I'm not sure what you got in your coffee there, but it's not. I'm sure we don't meet that description.
No, it is real coffee. In actual fact, what happened was, so I bet you I'll spill it now. Watch that. I love brewed coffee. So our coffee machine died a few weeks ago, and we bought a new one. So I'm enjoying the new brew. It certainly winds me up a little bit. It's all good. But yeah, gentlemen, thanks for joining us. I do appreciate it. And I know I mean that very genuinely, because I know how busy you guys are, and taking an hour out of your day to come and join this conversation, I really appreciate it. We've literally got hundreds of brokers who have joined us this morning around the country. Everybody's keen to learn a little bit more and to I guess get a bit of knowledge and inspiration from you guys as leaders in our industry. And you've all been in the game for quite a while, so you're well known, and we're all looking forward to having this chat. So let's start that one. What I want to do to get things rolling is just to understand you guys a bit better as people. So let's take the business hat off, and I'd just like to ask each one of you a little bit. What's your background? Where did you come from? What were you doing before what you're doing now? And be interested just to learn a little bit more about yourselves. Maybe you've been doing this all your life. I don't know. But Sam White, I'm going to throw to you, mate. You're on my top left, top right of my screen. So I'm going to run around that way. So Sam, what were you doing before what you do today? What's your background?
So I became a broker in '94. And so I was working as a salesperson at Ray White Paddington in Brisbane, and the LJ Hooker was just. I was sort of at uni, doing uni part time and selling real estate part time, and LJ Hooker was bought out by Suncorp, bought out a receivership by Metway, I think it was, became Suncorp, and we were worried at the time that the LJ Hooker would be able to offer their clients, financial services products that Ray White couldn't. And so we thought, look, we'd better get into offering clients financial solutions somehow, and so I became a broker. Mortgage broking just started in Western Australia. Mortgage Choice had just launched, I think. And So I became a broker, and we had, anyway. So that's how I got started, and my path since then's been a bit of real estate, a bit of mortgages, and now really loan market the last sort of 7 or 8 years.
Mate, that's excellent. I didn't know you were a broker. There you go. I've learned something today. It's excellent.
Yeah.
Sean, what about you?
I've had a bit of an unusual background. I studied accountancy, but I didn't go too far there. It was I actually joined the police force after my studies, so I was a cop for about 6 years. I left that and then joined in with St George Bank and went through their junior management program, their training program, where I got exposure to both the credit side and the wealth side. I started up a couple of branches when I was within the St George Bank system. Worked for one of my mentors before he passed away, was a gentleman named Jim Sweeney, who, for those who've been in the industry a while, would know Jim and Margaret, and they were inspirational people for me and probably inspired me to get into financial services. I then ran the Howard Mortgage Fund for about 10 years in various capacities.
Remember that well. Remember the old Howard Mortgage Trust very well.
Yeah. So Brett Howard gave me an opportunity in the early days, and I learned a massive amount from him. I spent a fair bit of time in financial services whilst I was at Howard, dealing with a lot of financial planners, and really got into the mortgage side when I was looking at the credit within that business. And for the last sort of 7 years, I've been with Yellow Brick Road. Both more recently in a sales and distribution side, which is not foreign to me because I was doing a lot of that when I was in the Howard Challenger business. But when I first joined here, it was largely around compliance and operational issues, managing that. So in the last sort of 6 to 12 months, been asked by the business to get more involved in the sales and distribution side.
Mate, excellent. When were you with St George Bank? What era was that?
94 through till 98.
I was with Advanced Bank in 92, when it used to be around before it got absorbed. Interesting. Very good. Mr. Boer, what about yourself, young man?
Peter, hi everyone. Thanks for the opportunity to be part of this forum. I think it's the first time I've been anything like this, Pete. So
yeah,
been looking forward to it. Thank you. My background is a bit different again. Accounting was a similar thing. I did accounting at uni as well. But look, I grew up in Tassie. Tassie boy. Started off at ANZ, 132 Charles Street, Launceston branch on the 14th of June 1988, and got started. Did the traditional up through Bank Johnny, up through the ranks on teller and all that stuff, but found myself in lending pretty quickly, and that was the time of the last recession, and I cut my teeth in lending, almost like going through the worst of it then, and seeing the consequence of what bad lending can do to customers and to the economy. And boy, was that a baptism of fire. Anyway, I've eventually ended up in Melbourne, like most Tassie people do, and working with ANZ there, did 16 years, eventually ended up at CBA, working in the broker channel, running the broker channel. And then at the height of the Royal Commission, an opportunity came across my desk, and I felt it was time in my career after 30 years in banking time to step out and get in and add more value to the industry, and hence I'm end up with Smartline and with REA, and it's been a wonderful experience the whole way through.
I can't resist. I'm going to say you saw the light. You got out of the dark side.
Yeah, well, that's it. That's it.
It was a bit all the time though, Sam, too, because I mean there was some dark days back then too around the future of the industry, and that was a big call.
Absolutely.
Confidence that maybe that.
Well, the funny thing, a lot of people said to me at the time, gee, Sam, you jumped out of a warm bath into this one, and I go, well, actually, I tell you what I believe in. I believe that what we do is we look after our clients. We look after our clients, and we genuinely help them. We add value to people in an industry where there's been a massive underinvestment within all the major banks regarding the capabilities internally around lending. Full stop. So, that's why brokers are successful, because they've got the knowledge and they care fundamentally. And I believe that is the most sustainable thing you can have.
Yeah,
So,
mate, I cannot agree with you more on that caring factor. And I know it's not always an easy thing to push it back when you're talking to regulators and so on, but what they don't understand is how genuine that care factor is, that they actually give a shit. Yeah, they care about their clients. They are local people, they're small businesses in their community that are working within that community as such. And yeah, it's such a powerful thing. And I think this is, it's something that comes a bit later, but why our industry will continue to gain from strength to strength, because brokers do care. That's why at the moment so many of them are so busy, is they care for their clients. They're out there, even if they may not be making money out, helping them get them through this period, as they themselves are trying to get through this period. And I think it's a powerful message. But one of the great things I love so much about this industry, and I've seen it forever, and it's bang on. And Sam, I'm going to stay with you for a sec. This Q&A with Whitey is not about, is not an advertising pitch on thing, but it's important, I think, people get a rounded perspective. I love learning more about people. I've learned something about each of you today that I didn't know anything about beforehand, and I'm going to be so much more respectful to Sean Preece, given he's an ex-cop, as I go forward. Maybe more so than what I was in the past.
A long time ago.
That's all right. But and I've learned so much from so many different people through doing this. It's a great learning thing, and it also, to me, and I hope, like I said, we've got hundreds of people joining us this morning. It's a newfound respect, I guess, if I can put it there. Not that wasn't there beforehand, but the depth of knowledge in our industry is just absolutely phenomenal, and it never ceases to amaze me. No matter who I speak to, the depth of knowledge and what people have done and the experience and skills they bring to the table are just absolutely brilliant. I love it. I love it. And I'm just a little bit passionate about it. but Sam, back to you. Tell us a little bit more about your aggregation business at the moment. So where you are there at Smartline. I don't want to spend too long on this because it's not the objective of what we're here for, but just tell me a little bit about what's the unique proposition that Smartline has in the marketplace.
Well, I think
besides your handsome good looks.
Well, why Smartline? Well, fundamentally, Smartline's a full support franchise model that it's very different from your bigger aggregators in that it literally is full support. And when you talk about that, people go, well, it depends on who you're talking to. It's not for everyone. But for those that come in, I'm very proud of the fact that our brokers are, you look at our average productivity against industry, it's well above, and that's really nice. Sustainable. So successful franchisees, client care, first and foremost, and continually investing back into our people, that's what it's about, and if our franchisees are successful, we're successful. And that's the formula. It's been the formula for 20 years, and it'll be the formula for the next 20 years. The benefit of being associated with REA now is we've got access to a much bigger resource pool and capabilities within REA that they bring to the table that helps Smartline to grow. So
we'll talk more on the property market too a little bit later, because I think both you and Sam White have got or the two Sams have got a unique insight into that because of your connections. Sean, what about you? Why YBR? And I'll talk about YBR, I think, because Vow's really the aggregation business, isn't it? All right?
Yeah, absolutely. Look, it reminds me of conferences that we've had, and I've got up and asked people what makes us different, why do we stand out, why you're part of Vow. You've got choice, you can go wherever you like. We're not locking you in per se. And the common feedback you get is family. The common feedback you get is that you can rely on the broker next door or the broker up the road, the broker with more experience, the broker with less experience that you can help out and give a bit back to. And I think it's being part of a family. Broking's a lonely business. Even if you work in a reasonable sized business, it's still a lonely business. And I think one of our jobs and one of the distinguishing features that we need to provide is that we're there to help people, and no better time has been demonstrated than through this exercise. We've upped our contact program. We've encouraged our brokers to up their contact program with their clients, even if they can't help them at the moment, just to let them know that they're there. Because I think in times of stress or crisis, That's what people need to know, and people want to know, is that help is available if they need it, that you care, that you're around for them. And I think that's the same for us with our clients, being the brokers that work within our groups, and I think it's the same for our brokers with their clients, being the customers that they provide services to. So, you know, we all offer very similar things by way of aggregation services, but hopefully one of the things that we try to differentiate ourselves on, not that I'm saying that the others don't, but it's giving that sense of family and sense of community and sense of an environment where they are working together rather than working in isolation.
Yeah, it's a very good point. Very good point. Sam White.
Probably similar. You know, we talk a lot about family. We are a family business. Brokers are family businesses, and they help families. So I think that continuity runs right the way through a lot of things. But probably the difference for us is we actually are a family business. We probably, the other thing is we make 4 promises to our brokers, which we try and get better at delivering every day. And those 4 promises are, you know, save me time, keep me safe, help me find and keep customers, and grow my business. And we try and focus on do those 4 things. And if our people are doing those 4 things and doing that better each day, then that's good. And we try and improve on that. Obviously, big thing for us has been tech in the last couple of years, and probably something that our reputation has grown around that space, which has been, which I think is going to be important for all of us moving forwards, is how we play in this new world coming out. And so I know you're saying it's not a sales pitch thing, Pete, and I won't go into it. We're obviously very passionate about it, all 4 of us, and so I'll put it there and move on.
But Sam, you're 100% right, and it is a bit of a theme, unintended, because what most people listening don't realise, these guys aren't scripted, right? This is all straight off the cuff stuff. But this whole theme of family, and we all work in it within the industry, to me is a critical part. It's what I've tried to drive the FBAA with, is that we're all part of a family. We need to care, and it's why I went on the mental health conversations that I do, and I'm expanding upon those in the coming months, as well as to anything we've done in the past. It's about looking after after one another, and it's not so much about competition. I think, Sean, you touched on it. It's about choice. Yeah. Not everybody likes me. Not everybody likes the FBAA. There is choice. And it's the same for whatever that reason is. Or I like to see things done a bit that way. Other people like to see things a bit that way. I know I can be a bit relaxed in my conversations. I don't always sit in a tie. Not everybody likes that. But it's about having that choice. And the thing is that, again, there are such great leaders, such as yourselves in this industry. I think it's a really wonderful thing about being in this game. I think what I'm now in my 42nd year in banking and finance. I've been first started broking in the late 90s. Never walked away from the industry. I love this piece of it. But it's a great thing. It's what binds us all together. It's how we got united through the Royal Commission. So we actually all do care, regardless of anything else. So interesting, Sam. I'll stick with you. Have you guys done anything different through COVID, or have in the past? And I know you may or may not want to talk about this, so if you don't want to answer this one, you don't have to. But have you guys done things in the past? Go, crap, that didn't work out so well. What's the journey been a little bit like? Is all run fairly smoothly, or there's been stuff that didn't sort of work out so well? And is there anything different you've done through COVID than possibly what you normally do anyhow?
Sam
White? Sam White. I'm sticking with Sam White. Yeah. Okay. So I'm going that way and then that way on the screen. Sorry, guys. Would you guys change your name?
Yeah.
I'll call you B1 and B2 in a minute.
Sorry. Can't even use Whitey.
Yeah, I know. Sorry, Sam White.
The thing about COVID is, I don't know about everyone else. I was shit scared when it first started back in March. My birthday is the 15th of March, and I think on about the 16th, about that weekend, that 15th was a Sunday, and that weekend it was getting bad, or getting serious. And then that week of that beginning of Monday, the 16th was pretty full on, I reckon, that one. And I was really very nervous. What was going to happen to trail? For were people going to be able to pay mortgages? What was going to happen to a whole lot of revenue in the business, people in the company? The whole thing was just really confusing. So what we started to do is, and we just knew the uncertainty was there, that it's debilitating for a lot of people. And over that first couple of weeks was sort of, what do we do? And we didn't really have the answers, other than we thought we just knew we had to keep talking to customers. There's going to be a lot more refinances, given the fact that interest rates have dropped a fair bit, and so we focused hard on just talking about that. So we just started talking. We did a lot more conversations with brokers. Where that first month we were just doing back-to-back small group sessions of 5 to 10 brokers, on the 45 minutes every day, every hour, going through, talking that through, and that was really what we did, was just talking to that. And we did obviously a bit of marketing on customer databases and stuff, but the main thing was just talking to brokers and just hearing talking through the frustration, the fear, the uncertainty, which I'm sure we all did, and it was all very scary.
And that care factor coming through again. So yeah, it was a real scary time. Thanks, mate. Sean?
Yeah, look, I think one of the greatest fears of all is fear of the unknown, and I think that's what we've just been through. When it all happened, as Sam just said, mid-March, we didn't know what to expect. We're going through a period of, we've never been through this before, where we're all heavily involved from an economic perspective, and we were concerned about economically what impact this was going to have. Our brokers all run small businesses, and we didn't know what consumer confidence was going to be like. We had a lot of change taking place, so there's a lot of pressures around communication. So I think the emphasis for us was, as Sam just said, and I think we all did it, was we upped the ante on communication. We did make sure that we were speaking to our brokers more. We were having more webinars. We were having more updates. We were trying to consolidate the barrage of information that was going out. We were trying to make people as comfortable as they possibly could be, both consumers and brokers. And I suppose we're also trying to anticipate and work out what impact it was going to have and prepare ourselves as best we can. And there's a whole list of practical things that you needed to do. So, we're doing this. We would probably have done this in a different way 6 months ago, and we're now doing it via, your Zooms and your go-to meetings and those sorts of things, which, is a change. And if you asked us, I remember people saying, "Why do you travel so much? Why don't you do it by video conference?" And everyone said, "Oh, it's not as good." And but it's worked out pretty well. So I think there's been a paradigm shift which has taken place, which has been a shock. And when you have those sorts of shocks, you sort of need to go through that storming period and then let it work itself out. And then as you come across things that need to change, you've just got to be agile enough to be able to deal with those. So we've tried not to predict. We've tried to manage on the run as much as we can, but at the same time, there were things that we needed to act on immediately. But your cause when you're in crisis is keep yourself available, keep communication open and concise so that people are clear on where they're going and what the future is. So that was our main objective during that tough period. And I still think we're still in it. We still don't know what the next 6 months or 12 months is going to hold. Today, massive figures in Victoria. What's that going to mean economically? What's that going to mean practically? What's that? There's still a lot of unknown. So it is a massive shift, and I think we're all adjusting as we go.
We moved all our staff to work from home back in that period Sam White was talking about, within a few days of that March period, and we've still got them there. We're actually looking next week to start and bring them back to work from the office, 1 week from home, 1 week from the office, on the premise that this could change at any time and you're going to go back full time from working from home. We're just trying to, I want to get a bit more of that social interaction going to a degree, that so long as it's, it's not overstepping the marks on physical distancing and all that stuff we've got to take care of. And it's a real hassle going back to the office, I must admit. I'd rather work in my dirty, grubby little lounge room here. It's simpler. But
Pete, I think that's a really good point, because I think one of the challenges that we've got going forward is culture. There's an element of culture that gets developed within an office environment, especially for our head office staff. And I'm really worried about losing that culture, and because you don't have people all together, you don't have the opportunity to just go and sit next to someone and have a chat about whatever the business issue is, but also have a chat about personal issues. And it's a little bit more awkward to intentionally pick up the phone or jump on video conference. So we're walking past somebody and just having a chat on the run, the body language kicks in and all that sort of stuff. So culture is something I think we need to think about really, really hard, especially over the next 6 months. Again, going back to that part of a family, for the broker network, I suppose that's something they've had to deal with for a while, that isolation type feeling, but even in their own offices. So yeah, it's definitely one of the areas that we're worried about.
Good point. Yeah, very much. Mr. Boer, what about yourselves?
I think if it casts my mind back to March, look, we were, it was interesting. We were in the midst of a rebranding exercise, rolling out new technology platform, and advanced on an integration project with the REA Home Loans brokers coming into Smartline. So we had a lot of change in flight. You know, one eye on best interest duty as well, and where's that going? And then COVID hits, and you go, oh my God, how are we gonna manage through this? But you go, you look after the people. So we mobilised remote working instantly. We're all set up to deal with that. So the team didn't miss a beat. And what we did is, like everyone, we upped the level of communication, but we also upped the level of support. So I rolled out a series of COVID support packages across the country through fortnightly webinars to our brokers with a 6-month period on a lot of those initiatives. Things like switching on leads and how we did that for our network through the REA business was part of it. Some of our local area marketing support things that we did, you know, so we gave a little bit back to help people through this period and just keep them busy. And we really upped the level of support around our email and client communication, so marketing for our franchisees, and that's gone through. And I mean, we're seeing the benefit of that now. Like it's quite remarkable. We all did the contingency planning, you know, 20%, 30%, 40% off the cliff. Well, it's actually going the other way. I mean, July is turning to be a really strong month, and that's good. It's good. I mean, we're just lucky that, I mean, we can continue to support people, and if any people ever needed support and good advice on money, it's now, you know. So brokers are well placed to deal with that.
Yeah, we launched what we called our broker support program back, I think it was April by the time we got off the ground, but it was very early on the piece. It's hard from our point of view to say, what else can we do? Because I know you guys are on the front line, but you know, I pushed our CFO around a little bit, so we're not reviewing our membership fees this year. And so by the time we get to the end of this, we'll be 2 years without any reviews. We put in a little payment program for people to be able to pay their fees if they're just having a dead period. So just trying to do a few things and a whole lot of marketing stuff. We developed a whole lot of marketing assets around Call Your Broker, so they could use it non-branded. Just use it, throw it out on social media, and remind your people to give you a buzz. Need help? Call your broker. There's some videos and some blog stuff for them.
I think that was one thing that was really, you know, talk about what we were scared about. You know, one thing that's good about it was, you know, you look back now and, you know, it's clear just how much customers need quality advisors. You know, I think the inquiry levels for all the brokers have been so strong. I know so many are so busy. There's a lot of frustration, obviously, with lenders in terms of turnarounds and stuff. But and there's a lot more work that's come from that. But one really positive thing I think we can all take out of this is that when times are tough, clients need a quality advisor, and they're turning to brokers. I'm fascinated to see what our market share is. Broker share is, you know, for this quarter that we're in now, and the one we just finished, the one we're in now. I reckon our market share is going to really shoot up because it's clear in, you know, just how important brokers are to their customers, and that's
mate. I want to stick with you on that thought because I am completely behind you on that. But more so, I'm looking, in my mind, I'm looking 3 to 5 years out. I reckon the brokers' market share is easily going to reach up around that 70 and potentially upwards of 80% market share. If we look at the UK model and their market share, don't look at them at the moment because all the brokers have basically gone on a sabbatical. There's only about 40% of the market left at the moment because they've all had to go on break. But generally, their market penetration is huge. Now, with the impact of best interest duty and brokers having the ability to go out there and say, I act in your best interest. I always have. Now, that was just a given, but now there's also a whole set of laws around it, but the bank doesn't sit under those laws. So I'm the one that's going to look after you the best. And now we see today in the media that one of the major banks is closing 115 regional branches. Now, my mind instantly goes back to, I've got here 93, 95, but I think it's probably closer to 96, 1996, where the banks started shutting branches all around the country. Our broker businesses went through the roof from that time and have kept us on that, the beginning of that trajectory still today. I can see some really great things coming off bid. Once we've got to get comfortable with it, makes us right. And I can tell you now, guys, I've actually challenged, I'm sorry, that's the wrong word. I've gone back to ASIC on a couple of points or one specific point, I should say, that I'm not happy with is where the RG landed. Conversation for another day, and they've acknowledged that, and we're waiting to see what the outcome is. But I see we're on a real cusp of a major stepping stone in our industry. What do you think, Sam White?
So let's leave bid. So I want to sort of bid it out for a bit. We'll leave that for another, when we talk about it.
No, but I'm just saying the principle of acting in somebody's best interest.
I think shares going to grow significantly. I've got no doubt, and banks should be able to shut branches. I mean, what the hell we got branches for anymore? And they've been prevented from doing it.
There's no one in there.
They've got extra costs, which means they've got costs they've got to recover from somewhere else, and it's we had that crazy talk from the Productivity Commission saying that, well, instead of using brokers, each lender should have 118 more branches. I mean, how stupid is that? So it's clear that distribution is now going through brokers and trusted, and I think best interest duty will be a blessing for brokers because it cements what we already know to be the case, what we all try to do. And the flip side of that coin is banks should be allowed to close branches if they want to. And I hope one of my biggest fears with COVID was the banks and the government would do a deal and say, listen, banks would say to the government, look, we'll help you out on this, but we need the quid pro quo is we want this back, and that maybe some people might have thought maybe they'd come back and hit the brokers and say, well, we want your help to hit brokers. And I don't think that's the case, but I do think what is they should be allowed to make decisions about closing branches if they want to, because if customers don't want them, why should they be open? So hopefully they'll close more of those if they want to, and they'll be able to put more money into helping look after customers, and brokers will be able to help get the right customer to the right lender at the right time, which is what we do. Yeah.
Oh, mate, I'm right with you on it. I think there's a very interesting period, and again, I purely look back on history and say this is what happened then, and it's starting to play again. So I think it's really good. Sean, what are your thoughts?
Look, I've had conversations with some of the bank CEOs where I know that their modelling is assuming or factoring in an increased exposure to broker. So they're planning on that. They assume that's going to happen, and so I don't think there's any doubt that broker will become a larger percentage of business flows going forward. And I think the banks have accepted that. I think they've realised that there is value in the intermediated market. They will get benefit from that. They've seen through this distress period where people didn't go to the branches, they went to the brokers. And we saw that in the numbers. We saw that in the inquiries when they were coming through, that first party was not doing a lot of business and third party was doing massive amounts of business. So when people want to know stuff, two things happened. They did go towards the major banks by way of the business they wanted to get right, perceived security, perceived size, but they also went to the broker to determine what solutions were most suitable for them. So they wanted a trusted advisor. So I personally think it's a given. I agree with you on those 70% numbers that we will get to that point. And I see this period, although it's been distressing for a lot of us, I actually see it as being a massive opportunity for us in the third party space. There will be plenty of opportunities for us to grow our businesses as the term is on the other side. I'm not sure what the other side looks like yet, but I think from a broker perspective, we'll get through this period reasonably well. And I think post-COVID, I think we'll be in a much stronger position than what we were pre-COVID.
Okay, yeah. Sam B?
Yeah, I'd add to that. I think my view on retail distribution banking is that it's definitely going to change, but it's definitely not going to go away. Branches are the lifeblood for deposits for the major banks, which is an important source of home loan funding. So it will change, but I think this move by NAB makes sense. But having read the article, they're talking about moving to some sort of job share arrangement. They're wanting people, their staff, to work remotely and provide more direct type support and so forth. So there's a bit of a reskilling going on. So I think the nature of work and how people work is definitely going to change. But you know, and I know, ultimately, this is, you know, relationships are built face to face, and are the strongest relationships. And so, you know, does digital and Zoom and webinars take over the world? No, it doesn't. It just supplements. But I think, you know, I know our guys can't wait for us to get back out on the road, get out and see everyone and do that. We're just hoping this horrible pandemic will soon be over and we can get on with it, because that's so important. Yeah.
I think there's a balance in it as well. I think there was a bit of a phobia, and I'm the worst. Bit of a phobia from doing things through video. I love meeting people face to face, but I think, you know, in the future has a bit more of a balance in it. And I don't think it's an even balance. I think it's sort of maybe a quarter or a third is digital and the rest of it's face to face. It's a bit of a mix. I know, so like politically at the moment, the conversations I'm having with both sides of politics is more now than what it is normally, because there's no travel time. It's all done through video conference. So it's a much more efficient means. Although in saying that, I've just had to go through and renew my security pass to Parliament House. I'm not sure how that's going to value me in the coming months, but anyway, that's life. That's a stupid thing. Yeah. Hey, Sam B, whilst I got you, I better answer some questions here, otherwise I'm going to get into trouble. So with the first homeowners grant, I was going to test you guys, and the home builders 25K for first home buyers or first homeowners, which banks are working a blend of that? Do you know?
I have heard a couple that have already started to look at it. So originally what happened, a lot of our franchisees came in and said, can we use this as a deposit? I think it was a builder grant. It wasn't a deposit grant. Although, you know, there is an argument that if you get the money back, I think there's an opportunity here for lenders to be innovative. Although we'll wait and see how quickly the policy machines inside the banks move. I think so for example, you know, you got a lot of, it was interesting seeing St. George come out with their $1 LMI proposition, right? So you could do an 85%
Who says there's no
now,
profit in LMI?
Right? So you could in theory, you know, do a loan for a first home buyer, get the 25 grand within a month of settlement and pay back off the loan and say, well, if we reduce the loan back below, can we get a rebate on the LMI, for example? Well, that a product manager or an innovative product manager inside a bank, you would think would look at that very closely and say, well, okay, maybe there's a proposition there we could do. But we're just waiting to see what comes out of that.
What comes?
I think the good news is, and we're seeing it through REA, is that land sales have doubled from year on year, and the level of inquiry that we're now seeing through home buyers, first home buyers, has quadrupled in June compared to the same time last year. Yeah. So what's happening is the stimulus has definitely got people moving, right? And I think even with what was done in New South Wales, again, this week with stamp duty, again, it's going to motivate people to get out there and transact, which is exactly what we need to happen to keep the economy flowing, right? And obviously keep our brokers busy, which is great. So WA and Queensland, while I'm on it too, you know, the level of inquiry in those markets has really gone up. WA's woken up. I don't know if the other guys may be seeing it as well in your numbers, but we're our brokers are very busy, and we're also seeing it through, you know, the reporting that I get out of Cam Kusha and Nera Cosby in at REA shows us that, the mining sectors seem to be firing again, and regional areas, Port Hedland, Collie, Karratha are going well again. So those boom bust areas seem to be on the rise again. Margaret River's going really well as a first home buyer. And I think, you know, just talking to real estate agents down here, I'm down in Mount Eliza and Mornington Peninsula, you know, good place to be locked down, Peter, is they're getting a lot of inquiry from all over the country, people wanting to buy lifestyle blocks because they're going, well, actually, if this is the new normal, we might as well get out where we can have a bit of room, bit of land. So I think we're going to see the tree change, sea change type phenomenon. We'll be back on again. Yeah.
Nice. Happy days. Sean, what about yourself on the first homeowners grant and the home builders 25?
Yeah, look, I think it's a very clear message from the government that they're going to need to drive the economic stimulus that's happening in the economy, and this isn't going to fix itself. They've got to get involved, and the way they're going to do that is by largely throwing money at it. And I think they see that you know, getting the building industry going obviously helps with your employment rate, getting first home buyers into the market, get your credit going, getting the banks involved in both that space. It's going to stimulate the economic activity across the board. So I think we've seen just a portion of what we're going to get from government stimulus going forward. I think there is an element of we're getting decisions made at government, and there's a bit of a gap before the practical application of it happens within the banking industry, and that's probably no one's fault. It's a question of, you know, you've got to catch up when some of these decisions are being made, and it always sounds nice in theory, then practically how it applies is always a challenge. And I think that's probably where we're getting the most feedback from the network is, okay, we know the grants are available, we know these things, but how do we actually get access to it? What can they use it for? And then bank policies and procedures need to be developed and evolved in order to make that happen. But I can sort of sympathise and empathise on both sides there. You know, that it's hard to mobilise the banks into these sorts of things. But it's equally, it's really good that we're getting this sort of stuff happening, and as Sam just said, there's no question it's going to work. So I think it's good, and I think it goes back to what we were saying earlier: more opportunity for people to target that demographic. I think that sort of, you know, 400 to 600 space is really going to prosper over the coming sort of 12 months, and a lot of that first home buyer, a lot of that building, a lot of land development, it's all going to be in line with government strategy and government opportunity.
Sam,
I sympathise with every broker around the confusion on policy and, you know, what is this, can you use this for, what can clients use this for, and I know how frustrating it is. I know, talking to the guys, it's just you know, they'll love to get it clear. Yeah, and I think, as Sean said, I think it's just, you've got to have a bit of patience with this, that, you know, government's sort of making policy, it's sort of on the fly a bit, I think, sometimes, and they're trying hard to get stimulus in and give confidence back, and that's taking a while to translate through to, you know, responsible lending, all that type of stuff through bank committees. So, but I get the frustration, and if I could wave a wand on that, we would, but I don't think there's any short-term solution on that one. But it will come. I think one thing is just keep a database, you know, of all that inquiry, because that will flow through, and if you've got a good database on that, then you're going to have a whole lot of activity, and they will go somewhere. There's a bucket load of, as Sam said, bucket load of inquiry. Stock is very tight. You know, sales stock. You know, we looked at the predictions of doom and gloom that, you know, we're going to see, you know, pricing go off 20-30%, and, you know, I don't know, these guys, they do it all the time. I don't think there's been one prediction from that group of the 5 or 6 they go to all the time, the media, and they're the same predictions. Like, oh, mate, they'll be down 20%, they'll be down 30%. One day, you know, they'll be right if they say it enough times. They've been saying it for like 15 years, and they've said it again, and they're wrong again. So it's frustrating to keep seeing the headlines, and then continually they get disproved. And what we've seen is that prices have not come off. In some cases, they've gone up. In some cases, they might be off 1% or 2%, but not by much. Now, obviously, there's uncertainty, and obviously there's some risk. I think it'd be good to have some powder dry for, you know, depending on how long this thing goes for. But I think there's been a lot more confidence shown by the community, by buyers in real estate, than there has been, you know, and it's continuation. I don't see pricing changing a hell of a lot unless mass unemployment comes through, and I think that's what the government's working very hard to avoid.
Yeah, I agree. Hey, what's your thoughts on sales rates? So, like auction rate clearances, are they still relatively strong, mate, or are they Yeah, still clearing?
Yeah, I mean, obviously, it's hard to talk about the clearance rate because there's lots of different clearance rates. Auctions are about 25% of the Australian sales market. So 75% happens outside of auctions. You know, they never were an auction, always private sale. So when people hear about clearance rates in some markets in Australia, they say, "What are you doing clearance rate for?" There's no such thing as auctions in my market. So take that 25% sold by auction, 75% not. Of the 25 that sold, clearance rates through the campaign period, on the day and after, are still reasonably strong. A lot of agents, it's always been challenging for brokers. For agents, it's been tough. I mean, social distancing in real estate, changing OFIs, not being able to do auctions on site, having to do it remotely. They had some big changes to make, and a lot of them adapted pretty fast. And clearance rates took a dip, but within 2 weeks after auction dates, clearance rates were pretty strong still. So, and the community's adjusted to that. So talk about Zoom meetings versus face to face. That's happening in real estate more and more. So, So our Ray White numbers are off by about 7% in June for the month. So not by a huge amount month on month. In June it was, I think. Still some good activity.
Yeah, it's good. It's great. I'm going to swap down below. Sam B, what about what you're seeing the real estate side with sales and so on? Are they still running hot from your view?
Yeah, I mean, Sam said the problem is the lack of stock, right? Supply. But there's huge demand. Demand's there. Obviously, investor. So you talk about investors. That's definitely softened as a result of COVID. But then having said that, I just saw some data that shows that inquiry in Perth and Canberra for investors is on the rise again. So there's a bit of growth in those markets. So it's sort of like the investors are still there, right? It's they're just looking for value. And obviously, I think developers are going to do it really tough in the next year. Consumers are changing how they transact property. So we're seeing a lot more off-market type sales as well, like Sam said. And there's more innovation. So even REA came out with their virtual open home inspections to try and support the industry.
Sorry, how are they going with that? How are they doing
really
inspections at the moment?
Going really well. Yep. So around each state's a bit different around what they can and can't do at the moment. But just new products like virtual open homes, virtual inspections, and so forth is just it just shows how flexible people are to adapt to the environment to continue to get on with it, which is great.
Another innovation.
Look, and I think that's just what's going to happen, right? We'll just have to find new ways to do business, and companies will adjust and adapt as they need to. It's still there. I do worry about what happens in the next 6 months where you see real genuine hardship, businesses that have been impacted, particularly as this thing like in Victoria drags on. I can't even remember the last time I went into the CBD. It's been that long now, and how businesses are going to survive. And you think about all those empty high rises and just the way companies operate. And even if we do return to work, the old open desk environment probably doesn't exist anymore, right? So,
wasn't that a trend?
Right? So
the old open office, we went from that trend of everybody being their offices to having open floor space. We're going, maybe not so good anymore.
Hot desking and all that. So ways of working will change. But I think I do worry about what will happen in the next sort of 6 months as those businesses that are really impacted. But then you think about businesses get bought and sold, and then the new people that buy them bring in new capital, new ideas, new ways of doing things, and then there's new growth off the back of that. So it's all part of the cycle. But we just got to be there to help support our clients as best we can, and also stay close to our lenders in terms of what we can do. And I mean, you talk about market share, right? We talk about market share in terms of share of new settlements, new money. But I'd like to talk about market share in terms of servicing our clients. We have never worked harder for the money, the value we get paid in terms of the trail than we have in the last 6 months to support our clients and help them battle this maze. And it's not something that we have stats on in terms of the quantity, but I know, speaking to lenders, like brokers have had a huge amount of value in helping put clients into appropriate strategies to get through, what is once in 100-year event. So, that's.
I think it is. I think it's a good point, Sam. I think that whole thing around remuneration review in 2022. I mean, this is proof that what brokers do for customers beyond the transaction, that stuff that was said that brokers don't have any value once the deal's settled, that's just, this last 3 or 4 months have shown us how stupid that comment was.
How wrong that argument is. That's right, and we must never lose sight of that and continue to support and talk about that.
No.
Yeah.
And we need to maintain data on this too. And I know, Sam, you brought this up to me. Sam, Mike, you brought this up to us before. As we head towards 2022 on that review, these are all things we need in our armory probably into next year, because it'll start before that. To say, this is what we do. This is why it works. Not only is there a piece of maths that makes it work for the lenders, so it keeps interest rates down. You're not trying to pay a big upfront, all that sort of crap. But this is the professionalism of an industry, and it gets supported because of this mechanism, and they go above and beyond yet again.
I mean, can you imagine going to a customer and saying, listen, I can save you $5,000 on your interest rate, but listen, before I do that, I need you to sign this. I need you to pay me some money. It just goes against the whole concept of trying to create competition in the marketplace. And I think brokers have given competition in this last 3 or 4 months during a tough time. It's been awesome.
Yeah. I noticed my clock's starting to work against me. Very quickly, I want Sean. There's been lots of conversation in the media, and I must admit I've been one that's been out there fairly loudly on it. Delay times with lenders. They started to prioritise purchases and not so much refinances. I know I had members coming to me saying, it's taking, I was originally shocked when it was 35, 40 days. People saying it was 50 days and above. I had somebody the other week come to saying a loan we put in the system, it had no comebacks, nothing missing. It settled late June. Crap, that's basically 6 months. What are you seeing there? Or are you seeing a change? I noticed some of the banks are coming out in the media saying they're bringing staff back on shore and stuff. What's your view on that? Well, the other boys have been talking about properties and so on.
Yeah, look, I think it's a great example of automation versus manual, and I think it's also a great example of agility within the banks. So where you've got automatic decisioning tools, which some of the majors are better at than others, I think that's helped them with their processes and the efficiency of their processes. Where you've got manual processes in place, you tend to cap out real quickly with the volume of business that you can deal with, and then every loan that comes in over above that just becomes a bigger problem. And I think they've recognised that, but again, big organisations, they're hard to mobilise, right? It's like moving an oil tanker, right? You've got to think about the decision, you've got to move. But I think a lot of them have been caught out as a result of this. The unexpected volumes that have gone through to the majors and then you add to that I think the opportunity for the majors to grab back market share post Royal Commission. We were seeing our numbers sort of heading a smaller portion towards the majors and a greater portion towards the second tiers during that Royal Commission period. I think it was about 73, 74% of business was being written into the majors or their subsidiaries, and now we're up in the 80s again, in the low 80s. And again, it's that thing I said earlier, that flight to confidence, or confidence with size. But I think what it's done is that the ones that are doing well are the ones that are probably better prepared from a technology perspective, and they've also redeployed staff really well. So they've taken staff away from one area and put it into another area, and staff or skilled them up to deal with that backlog, where others just haven't had the ability to do that, or have had the agility to do that. Combine that with a lack of technology, and that's where some of them have been caught out. So I think that's what the cause is. Is it happening? Absolutely, it's happening. What I find amazing is that people tend to be sticking with it, but so we don't seem to have a lot of people dropping off because of the time frame and saying, "Oh, I'm not waiting 4 weeks or 6 weeks for my loan to get settled." They're actually sticking with it. So we're not actually finding a lot of people saying, "Well, that's not good enough, and I'm just going to go back." Maybe that's driven because of the upfront incentives, and people are happy to wait because they're going to get the upfront payments.
The cash incentive from the bank.
Correct. Yeah. Or maybe it's complacency. I've done all the work. I just don't want to go through that process again. I'm not sure what's driving it, but that's one bit that has surprised me. We're not seeing a lot of people pulling out from one and going to another, which is good in one way. At least they're being consistent with the application process.
Yeah. So Sam B and Sam White, are you guys seeing the same thing? People pulling out or not pulling out, like Sean was saying?
Look, there's been a few transactions that I'm aware of that have had to pull out for because they're time critical, and we're definitely getting a lot of, we've had a few complaints as well that have come through as a result. Frustration levels are high. I mean, the lender's most impacted by it. Like it's a problem of their own design. Okay, so ultimately, I think there's a moral argument here around creating demand for a product and then not being able to fulfill on a reasonable service level. But that's a whole other debate for another day with a bigger group of people above my pay grade, I reckon. But
no, you're well.
Ultimately, it's at the end of the day, as a responsible franchisor aggregator, we've got plenty of other lenders on the panel that have been willing to step up when needed, and they have, and that's fantastic, right?
So I think that's one thing that we need to do is we need to let people know what those timeframes are so that they do have choice. And if that is important to a customer, that's a factor in their decision making.
Sam White, have you seen much of an impact from that?
I'll just be repeating what the guys already said, so I won't waste the time.
Oh, don't be like that. Well, we need to hear you. Well, now I've got you.
I think no, 100% what they say. It's what they said is 100% right.
Yeah. Well, I've got you now. I am seriously out of time, but I want to wrap with something. I want each of you, and you're not ready for this, but that's okay. This is a question that's come through. In your opinion, what will be the most significant change in our industry post-COVID? Sam White, do you have a thought on that?
The digitisation of the mortgage process is going to become a bigger part of it for brokers, and I think paperless mortgage broking and the ability to have automation in that process from a broker to a bank, that will be the legacy of COVID, in my view.
Nice, great insight and wisdom. Sean?
Yeah, I'd have to agree with that 100%. I think the use of technology in every component of our business is going to become more important. Technology for compliance, technology for efficiencies, technology for communication, technology for CRM, client management, ongoing relationships. It is the future of our industry. There is no question about that. We can't. I'm not saying that it's replacing the human interaction component. That is always going to be critical. But technology as a tool is going to be a much greater used tool going forward in all aspects of the way in which we do business.
Yeah. Tool driving the process. Sam B, what's your thoughts on what will be?
So I want to be a little controversial on this one.
Go for it.
Technology is important, but it's the floor, not the ceiling. It's just building a better hammer at the end of the day. Things like consumer data, open banking, game changers, absolutely. But fundamentally, you still need professionals, skilled professionals, motivated individuals who are passionate about the client to make the industry, the other lifeblood of the industry, make it tick. And that's where the support bit, I think, is also critical. So knowing how to use the tools to their full potential, actually having a good conversation around business planning, marketing, client care, compliance, training, all these things, that's not going to change. It's we just need to get better at it, and it's all of the above, Pete, that's going to set this industry and get us to that 80% that you envisage.
Mate, it's not unachievable. That's the thing. Gentlemen, I'm out of time. Can I just thank you from me personally? I really appreciate your time. I so respect your insight, your knowledge and your wisdom, and also your experiences. And I just like to thank you for joining us. I really appreciate it. I'm sure everybody around the country appreciates you taking time out and the conversations there around our industry. So, gentlemen, thanks so much. I really appreciate it. And I look forward to catching up with you in a few more months, and we might revisit some of these conversations and flesh things out a bit further. So I'll put you on notice now. Gentlemen, thank you so much for joining us. Appreciate it.
Thanks for the opportunity, Pete.
Thanks, Pete. Appreciate
it. Guys.
Yeah.
Take care and stay well. All right. What great insights from these guys. That was a great conversation. I wish I had another hour or two up my sleeve that I could spend with these gentlemen to talk through a whole lot more issues. I know there's more questions there, and sorry I didn't get to them, but time has beaten us. Anyhow, that's this week done. So next fortnight, we're going to start to have a broaden our conversation with some special guests, and we're going to talk more on your health and wellness. I know I talk a lot about mental health. It's extraordinarily important, but the conversation here on wellness is very, very significant at the moment as we're dealing with COVID, the impacts of lockdown, increase of cases, the hard times that poor folk are going through in Victoria. Let's have another conversation around this, and we're going to bring some new perspective to the table. So get ready for it. Make sure you register for it. That'll be Thursday, the 13th of August. I look forward to joining us then. And once again, thank you to our sponsors for their support and all that they do for us and for you around the country. And remember, you'll shortly get an email which will give you your CPD code. You're now a CPD. There'll be a short survey. Please fill it in. We really need your feedback and any suggestions you'd like us to take on, the opportunity to do it there. And once again, thanks for joining us. I look forward to seeing you in a couple of weeks' time. Stay well. Bye for now.